Okay, let me just record this. Okay, I think I sent the link exactly at 7 p.m. So probably some of the guys are still logging in. In any case, we can get started. Hopefully the guys will just catch up. Anyone who missed any parts of the session, you can just go through the recording. And today, as I mentioned in the Telegram channel, we're supposed to be doing more of a Q&A type of thing. All right, so question, and then whatever question that you might have, I'll just answer, and then hopefully just expand on whatever, let's say, was troubling you or whatever issue that you might have had, or just something that you saw somewhere and then you actually were like, okay, I'm not too clear on this. Maybe it's something that we did in a previous session. I already uploaded the session that was technically for yesterday. So you can just go through that. I think it's uploaded already on the YouTube channel. And in the meantime, while I wait for some of the questions to basically come through, I'll be going through some of the more important questions that I got from the WhatsApp, and I think it was from Telegram. There were a few questions that came in from WhatsApp and Telegram that had to do obviously with the session that we did, the previous session, which was yesterday's session. And the video that I put out spoke about essentially trading like casino and leveraging off the fact that when it comes to the markets, you can actually predefine your risk before you get in. So you can say, okay, this is the maximum amount that I'm willing to lose. No, and this is the amount that I could potentially make when it comes to the market going in my direction. So those are very good positions to be in. Like when you actually know how much you can potentially lose from a single trade perspective, it's very, I can say, enlightening, because at the end of the day, you're not worried about it's not like the losses are going to be too over the top, right? If you plan your trades out properly, it basically means that whatever positions that you do have, you already have a set, let's say, dollar amount. I don't typically use dollar amount as a threshold for maximum risk. I just use percentage. So if the account obviously is $1,000, I'd use 1% risk. Right? And if the account is $10,000 or $100,000, then I'd still be at that 10% risk. So the dollar amount doesn't really, I can say, affect the way in which I view. It doesn't really affect the way in which I view that particular trade. So it's not so much dollar based, but it's more percentage based. So being able to determine those two things before you enter into a trade, right? As I always say, you predefine risk first, right? Risk is the more important one out of the potential profits, right? Because everyone goes into a position, and one of the first things that we typically do is imagine how much we're actually going to make off of that position. So we imagine, okay, we're going to make $200, we're going to make $300. And we know that there's a possibility that the trade will go in our direction, but a lot of people push that possibility so far back in their minds that it doesn't even enter into, let's say, the conversation when you're talking to yourself, when you're placing the trade. So I feel like I always, when I look at a position, I'm always focused on the loss part of things. I'm not sure if that would help anyone, but I'm always focused on the worst case type of scenario, right? So worst case, I'd lose 500 pounds on this position. I'd lose 1,000 pounds on this position. So for me, that has helped me, because it's all like got me accustomed to how the markets can say unpredictable in a very casual sense, right? They are unpredictable. Okay, you don't know what's going to happen today. You don't know what's going to happen tomorrow. I mean, it's even like what's going to happen in the next 10 or 15 seconds. The one thing that you can control is obviously what you do on a day-to-day basis. So the process leading up to the execution of the trade is the only thing that you basically can control. Now, one of the other questions, I think related to the Fibonacci. Now, I think the Fibonacci, I came across it like 2 years ago, if I'm not mistaken, and can't quite remember who got me involved in the Fibonacci, because the person who taught me the markets, they only used, I'm not sure if, I don't think I have the indicator here. Okay, no, I don't. If you guys aren't familiar with it, it's called the round number, right? Big figure or round number basically highlights, okay, right. So the big figures, right? So let's say we're looking at the United States dollar versus South African rand, okay? A round number would be 15 rand, okay? Market moves up 15 rand 03, 1507, and then reaches 15 rand 50. Now that's also a round number, okay? So in this example, I mean, let's say using this Euro USD, the round number would be 121.50 and 121.100. Okay. So 121.50 and 121.100. So basically it's 50 pip increments, because there's 50 pips within. Okay, guys, if you have any question, just shoot them through and then I'll. Okay, I am already recording the session and I'll send it through in the Telegram channel. I'm not sure how to do that on my side, so I'm not sure how I can allow you to do that, but since I've already started recording on my end, I'll just send through the recording as it is into the Telegram channel, so no need to worry. Okay, perfect. Right, so 50 pips, right? So that's basically the space or the distance between these round numbers or big figures. Now, like I said, that was the main thing that the guy who taught me, most of what I know in the markets actually focused on, trading these institutional levels, right? And obviously just coupling that with some pattern recognition. So it was incredibly helpful because, I mean, if you look back at certain price levels, you'll probably see that, okay, I mean, these round numbers are very consistent. The market ranges, the market ranges probably about 80% of the time, and it only trends a very brief moment, like 20% or 15% of the time. But in most cases, most of the time, the market is just raging sideways. So it's just basically going sideways. So it hits these levels. And you'd be shocked to see, let's say, if we highlight just these two levels and you just go back in the charts, let's say, instead of using the 4 hour, let's say we use the day or the weekly. Okay, now we're looking at the weekly. Okay, we see this 121 handle. The market was there somewhere in 2011. Okay, also nice support level at 121.50. I think it was 2010. So, and I think it was 2017 where the market reached that 121 handle again and rejected off that level. So you basically take these round numbers and they have a lot of significance. Obviously, that's where a lot of profit taking comes in, a lot of order execution comes in, right? You have institutions that are like, okay, we'll buy at 15 rand, let's say the United States dollar versus South African rand, we'll buy at 15, and then we're gonna sell it off once it reaches 17, right? So that's our get out point, that's our target point. So as soon as the market reaches that, there might be a lot of orders to liquidate some longs, right? And that will cause the market to, drop quite significantly. Now, sometimes the drops are just 50 pips, which for me is much easier to capture than, let's say, 150 or 200, right? So that was one of the nuances that I sort of like learned from him, that in most cases, you're gonna get those rejections around those levels. Whether the market continues going up, right? So let's say I shorted 121.50, whether the market continues heading upwards, but typically you are going to reach that 2100 level. So if everything sets up properly, most of the time, between 85 to 90% of the time, you will reach at least 50 pips worth of profit, you know. And then obviously he wasn't too fond of the idea of just taking 50 pips, but I sort of like tweaked things to enable me to, get 50 pips. I went as far as tweaking to just getting 10 pips, because at about 10 pips away from a round number, I would usually get about 95, 96% accuracy on my trade. So that was a pretty, um, I could say, high percentage, right? So high percentage win. But it was a lot of work because you're dealing with a whole lot of trades and you're only taking like 10 pips. And so it requires a whole lot of activity. And I found that the payoff is more or less the same if you just take one or two positions that will gain you 150 to 200 pips. So that to me is basically how I then started off, but introduced the Fibonacci as a way to sort of like highlight these pullbacks, because the markets, as I always say, um, which is an old saying in the markets. Markets moves 2 steps forward and 1 step backward. So let's say it will drop. Let's just imagine that this is 100 pips. Okay, you can probably tell that this MT4 platform I just downloaded. Okay. All right, so let's just say this is 100 pips. The market drops a clean 100 pips and it pulls back, right? So the 100 pip drop would be the 2 steps forward, okay? And the 50 pip pullback would be the 1 step backwards. So 100 pip drop, 50 pip pullback, okay? Now, the Fibonacci retracement, I then sort of started experimenting with it because I had heard things about it, but a lot of people were using it for what's this, Elliott wave and these Gartley pattern, which are okay. It's just that for me, I mean, it's way too much work. First wave, second wave, D wave, and all of that. So I mean, for me, I was like, no, I'm I don't know, but I can say I'm probably ADD or whatever the case may be. And I just like very simple, right? So for me, only the 61.8 and the 50% actually matter, right? So I looked at then these two levels, okay, these two levels as, because obviously I took that into account. Okay, market moves 2 steps forward and 1 step backwards, and obviously I did a lot of back testing and found that really the market does tend to pull back to that 50% range. Okay, simply because, and I might have mentioned this. Let's say the market is moving from 15 rand, the United States dollar versus South African rand, and then it pushes up to 16 bucks. Okay, to 16 rand. Then as a major institution, okay, it would be more beneficial for you to wait for the price to drop back down to 16 to 15 rand 50 and buy some more US dollars there, as opposed to just buying where the market is at 16 and then having the market drag you the opposite direction, having the market drop and then move higher. So that means that, I mean, you can get the price or you can get the fill of whatever you are trading at 50% cheaper, right? At 50%. I always make the example of the laptop. Laptop is normal price is 1,000 bucks if you buy it today, or you can wait for it and then buy it sometime next week, Monday. It'll be on special. It'll be 500 bucks, right? Which would be the logical thing to do. Wait for Monday to buy it 500 bucks, or just buy it right now at 1,000 bucks. Okay. So if you're like me, obviously you'd be like, yeah, 500 bucks. Let me wait for Monday. So that is the frame of thinking that basically goes into the Fibonacci retracement, right? So yeah, then from my end, those are the two zones those are the two retracement percentages that I actually follow. I don't follow 38.2. I don't look at the 23.6. I don't look at the 70%. I just do the 61.8, which sometimes I call the 62%. I don't know, like I said, I mean, like simple, 6.1 and point this, it's not really my style. So sometimes I just call it 61.8 here, the 62%, I just round it off. So 62% and the 50%. All right. So that's basically my trading zone. So anything that comes in there is an area of interest for me. If it's outside of there, if it comes down to the 60, I mean 38.2, then I mean for me it's I don't know, it means really nothing to me. But if it comes into that 50 to 62% range, then I start feeling like, okay, there's some potential for the setup there. And obviously now that won't be the only thing that I look at, but it's the start, right? It kicks things off. So it's very easy for me to basically look at charts. I mean, I don't know. I think today with the live trading room, we spent like, I don't know, 15 minutes. We analyze markets. I'll probably send the recording if I recorded that. So we met up sometimes 7:30 in the morning, and it was probably like 15 minutes, and we got off like three trades for today, and it only took like 15 minutes, but we analyzed like 7 or 8 markets, 7 or 6 markets. Yeah, I think 6 or 7 markets, and it didn't take more than 15 minutes. So for me, when it comes to the analysis part, I mean, it doesn't really take that much, in terms of time wise, because if you know already what you're looking for, then it's much easier to find it. But if you're not too sure what you're looking for, you might spend. I mean, I used to think analysis took like 2 hours. I used to stay there, and then after 15 or 30 minutes, I'd feel like I didn't really do anything, and I'd force myself to sit in front of charts. But now, I mean, 15 minutes I'm done. And it seems very easy, to be honest. It seems like incredibly easy right now, because I think out of that 15 minutes to like up 2,000 pounds, you know, and just off of 15 minutes of analysis. Obviously, it takes time and experience to get to a level where you can scroll through markets and then just be able to look at them and find certain things that aren't really in your trading plan. Sometimes you might go with a position because you are familiar with what the market does. So everything lines up when it comes to your trading plan. Like, okay, there's the Fibonacci. You might have the moving average. There's a round number there. Like everything is perfect, but don't take the position because um, my system basically gave me a sell signal at 21.50 on the Euro USD today. Okay, and I didn't take it. Okay, it gave me a short signal at 21.50. But I didn't take it. I mean, I was like, the trade just doesn't feel right. I went on to take the Euro JPY, which is one of the trades that we took in the trading room. I went on to take short in the Euro JPY and GBP AUD. We also went short there, and we went long on the NZD USD. I think some guys are still in the NZD USD, but the Euro USD just didn't look right. Technically, you had everything that you're looking for. So if you go through the PDF, the 5-star trading strategy, I mean, everything was there, right? It's just that it didn't feel okay for me. I would have made some money on it, at least 50 pips, I'd probably even be at break even or, banked about, I don't know, 500 pounds on the trade, like 50 pips at least, or yeah, I think 50 pips at least, or down to these lower levels, probably bank about 80 pips or 90 pips. But for me, long term, I want to take positions that I know have a higher probability of working out than not, right? Obviously, the markets are not a certain place. You can't look for certainty in the market because you will be very, very frustrated with the markets, obviously. You can't know for sure what's going to happen in the markets, right? So you just playing with probability, and obviously with a bit of time and experience and consistency, it becomes much easier to sort of be able to understand that you're going to have losses that are going to come. Right? You can't predict the market. For me, I always go in thinking, okay, if I lose this position, is my account still going to be okay? If the answer is yes, then I go ahead with it. Right? Sometimes I might have 5 positions. I'm like, okay, if I lose all 5 of these positions, will my account still be okay? I'm like, okay, yeah, that'll still be fine. And if that's the case, then I mean, I stick with it. Okay. So yeah, hopefully I answered the question about the Fibonacci. So yeah, I mean, for me, it's obviously I didn't start off with it, but now it's a must. You know, it's a must definitely. So I have a couple of videos on the YouTube channel regarding the Fibonacci. Just make sure to go through them, do your own research on the Fibonacci, go through the PDF. Fibonacci retracement is pretty cool tool. Obviously, for me, one of the major benefits is that it allows me to place pending orders in certain areas. You know, so I don't have to be chasing market. I don't have to be making decisions in the moment. I can do my analysis, let's say now, in the next 30 minutes or so, and then place my pending orders at those 50 to 62% ranges. And then once that's done, I close my MT4 platform and I don't need to worry. I can play video games, I can watch YouTube videos, you know, I can mess around, I can go to the gym. Basically, I can just take my mind off of this and I won't be forced to sit down and watch the markets, which is usually when a lot of people start making mistakes, right? So sort of like remove the emotion part by just placing a pending order, right? So there's one other tip that I'd give you guys. It's definitely, if possible, find a way to use pending orders in your trading as opposed to market execution, because that's really one of the ways to eliminate a lot of stress when it comes to your trading. Okay, I do believe I answered all the questions. If you guys have any, this is the best time to shoot. Okay, all right. So if there aren't any questions, we'll be ending off tonight's Q&A sort of session here. Tomorrow we're just going to have our normal session, 7 p.m. It does seem that the load shedding has been suspended, hopefully for good, which I doubt, but I think for now we're safe and we can just go back to normal time. So 7 p.m. we're going to be doing our session. Tomorrow's more of an advanced session. We'll be looking at more of technical analysis than anything else. So make sure that you guys are around for that. Link will be sent at around 6:55 to give everyone a chance to come to be able to log in. I'll send through the video for the guys who've missed any parts of the session tonight. And if there is anyone here, obviously I regularly update what's going on when it comes to the copy trading, as well as the guys who are using the EA. I always post the stuff in the Telegram channel for you guys just to make sure that everything that's basically happening in our account is 100% what's happening in your account. Okay? So if you do have any questions regarding that, so if you do feel like, okay, there's one trade that's not there, that's supposed to be there, or the prices are different, or whatever the case may be, I'll leave the link to the WhatsApp chat. So just click on the link, it's going to take you directly there, and then whatever questions that you might have, issues that you might have with the basically copying out trades, you can just send them through there. Right. So hope you guys enjoy the rest of your evening, and I will see you guys and chat to you guys tomorrow evening at 7 p.m. Cheers.